Have you ever wondered how the US stock market works? Let's break it down a bit. When you hear the word stocks, think ownership. Stocks are a type of security that signifies you own a slice of a corporation. It's like having a piece of the pie. But it's not just about ownership. Owning stock also means you have a claim on part of the corporation's assets and earnings. So if the company does well, your slice of the pie gets a little bit tastier. Now there are two main types of stock to know about: common and preferred. Common stock usually entitles the owner to vote at shareholders' meetings and to receive dividends. Preferred stockholders, on the other hand, generally do not have voting rights, though they have a higher claim on assets and earnings. If you're intrigued, stick around as we delve into the fascinating history of US stocks. The US stock market didn't just appear out of thin air. Its history is a tale of innovation, resilience, and economic growth. Our journey begins in the late 18th century, under the shade of a buttonwood tree. In 1792, 24 New York City stockbrokers and merchants signed the Buttonwood Agreement. This pact marked the birth of the US stock market, with the brokers agreeing to trade securities on a commission basis. Fast forward to 1814. The Buttonwood brokers moved indoors, creating the New York Stock and Exchange Board, a precursor to what we now know as the New York Stock Exchange. This marked a significant milestone in the evolution of US stocks, establishing a centralized location for trading. Then came the Roaring Twenties, an era of prosperity and economic growth. The stock market was booming until the infamous stock market crash of 1929. This devastating event triggered the Great Depression, a decade-long economic downturn. Despite the hardships, the stock market demonstrated resilience, bouncing back and continuing to evolve. As we moved into the later half of the 20th century, the stock market saw another significant innovation: the introduction of electronic trading. This shifted the trading landscape, making it more accessible and efficient. The days of physical trading floors started to fade, and the era of digital trading began. Fast forward to the present day, the stock market is now a high-speed, high-tech world. Technology and high-frequency trading have revolutionized the way we trade. Algorithms and artificial intelligence now play a significant role in trading strategies, making the stock market more complex yet more efficient than ever. From its humble beginnings under a buttonwood tree, the US stock market has evolved into a complex and powerful financial entity. This journey through history shows us the power of adaptation and innovation in the face of change and adversity. As we look towards the future, who knows what the next chapter in the story of US stocks will be? Now that we know how the US stock market came to be, let's understand some basic terms. First off, let's talk about stock symbols. These are unique identifiers for public companies on the stock market. Think of them as the company's nickname on the trading floor. For instance, Apple Inc. is represented by the symbol AAPL, while Microsoft Corporation goes by MSFT. These symbols are used across all platforms, so wherever you're trading, AAPL will always represent Apple Inc. Now let's delve into common and preferred stocks. When you buy a company's common stock, you're essentially buying a piece of that company. You become a shareholder with a claim on part of the company's assets and earnings. Not only that, common stock usually comes with voting rights. This means you get a say in major company decisions, like who gets to sit on the board of directors. But remember, with great power comes great responsibility. If the company hits a rough patch, common stockholders are last in line to receive any remaining assets after debts have been paid. On the other hand, preferred stocks are a bit like the VIPs of the stock world. Preferred stockholders also have a claim on the company's assets and earnings, but they get to cut in line ahead of common stockholders. If the company decides to distribute dividends, preferred stockholders receive their share first. And if the company goes under, preferred stockholders are higher up the pecking order when it comes to divvying up remaining assets. However, this privilege usually comes at a price. Preferred stocks generally don't come with voting rights. So, whether you're a common or preferred investor, understanding these terms can help you navigate the stock market. Remember, every investment carries risk, so it's essential to do your homework and understand what you're getting into before diving into the world of stocks. As we continue our journey, we encounter some more terms that might seem complex, but are actually quite simple. Let's start with a stock split. This happens when a company decides to increase the number of shares in circulation. But don't rush to celebrate just yet. Your total stake in the company remains the same. A stock split simply divides your existing shares into multiple parts. So why do companies do it? It's a strategy to make the stock more affordable and attractive to a broader range of investors. Next, let's dive into the world of penny stocks. These are shares in small companies that trade for less than $5. They might sound like a bargain, but they come with a catch. Penny stocks are notorious for their high-risk, high-reward nature. They can be a gold mine or a landmine depending on your luck and skill. The companies behind them are often unproven, making it hard to predict their future performance. So if you decide to dabble in penny stocks, remember it's essential to do your homework. Finally, let's talk about how to trade stocks. The first step is to open a brokerage account. This is your ticket to the stock market where you can buy and sell shares. But don't just dive in head first. It's crucial to research the companies you're interested in, understand market trends, and have a clear investment strategy. Remember, the stock market is not a casino. It's a platform for investing in businesses. Those who approach it with patience and discipline are more likely to reap the rewards. In conclusion, the stock market is full of opportunities, but it's also fraught with risks. Whether it's a stock split, a penny stock, or a blue chip stock, understanding what you're getting into is key. With knowledge and careful planning, anyone can participate in the dynamic world of U.S. stocks. So there you have it, a brief overview of U.S. stocks. We've journeyed through its rich history, deciphered stock symbols, and differentiated between common and preferred stocks. We've even dived into the concepts of stock splits and penny stocks, and touched on the basics of buying and selling these assets. Remember, the stock market can be a path to financial growth, but it requires understanding, patience, and a willingness to learn. So get out there and start exploring the world of U.S. stocks.